Brian Westbury says we're all Keynesians now? Ah! If that doesn't scare you, looking at old Pablo over here with his mean look and his floppy ears will scare you. This is Dateline today. What is it, the 16th of September? So Brian Westbury from First Trust Economics blog, who, him and Bob Stein, big fans. All right, so let's see what Brian Westbury is talking about Keynesian. This drew my ire and attention. I haven't read it yet. We're all Keynesians now is a phrase that caught on in the late 60s and 70s, variously attributed to Milton Friedman and Richard Nixon. Uncle Milty was commenting on the general political environment and economic environment, not saying he was a Keynesian. Richard Nixon, on the other hand, actually said, I am now a Keynesian. Richard Nixon, look, everyone says Jimmy Carter was the worst. Nixon was the worst president we've had. Would Nixon be worse than FDR? Probably not. But certain, what's his name? Woodrow Wilson was certainly the worst president of the last century. But Nixon's up there. No other way around that. We bring this up because it's happening again. While we won't explain the entire theory of economics proposed by John Maynard Keynes, it was a demand-side belief system, i.e. government spends and that will create demand, which will grow the economy. A key tenet was using government spending, budget deficits, and loose money to let the bureaucrats exert control of the economy. The modern monetary theory, MMT, MMT is going to save us, as if we needed to be saved. After his failure in the 70s, my man RWR, Ronald Wilson Reagan, and the freaking awesome Maggie Thatcher changed the world by moving it back towards a supply-side small government mentality. The U.S. and U.K. moved from high inflation, high unemployment, and slow growth to low inflation, low unemployment, and strong growth. But since the crisis of 2008, the commanding heights of economic control has once again shifted towards big government. Quantitative easing, zero interest rate policy, negative interest rate policy, TARP, infrastructure spending, minimum wages, rent control in California, new ideas for wealth taxes, free health care, and of course the Green New Deal. Have all been proposed or tried. Come here, buddy. Let's invite Pablo to join. Come here, bud. Come join me. People want to see old Pablo in action. Here you go. There he is. Yay! Everyone's waiting to see you. All right. The result: ever since government has assumed the high ground, global growth has stalled, especially when compared to what it was in the 80s and 90s when government was reducing its role in the economy. Does a consistent failure to create growth matter to those who are proposing big government? Of course not. That's crazy. They want the power. They ignore it and call for even more government intervention. Just this past week, Mario Draghi, in his last action as head of the European Central Bank, cut the interest rate it pays on excess reserves to negative 50 basis points from 40 basis points, negative 40 basis points. But negative interest rates have been little short of a disaster. European and Japanese banks are suffering. Their loans and economic activity haven't budged. There is zero evidence that negative interest rates help economic activity, but plenty of evidence they hurt. Draghi himself called for more fiscal policy to help for the economy, but he wasn't suggesting tax cuts and regulatory relief. He meant more government spending. A pure Keynesian prescription. So is he acknowledging that monetary policy can't work and we need fiscal policy? Isn't that interesting? Because we've been heard nothing else since since Greenspan, that the monetarist and the Federal Reserve Board and the European Central Bank and all that, they can do everything they want with just monetary policy. Here's the problem. Demand-side Keynesian policies don't work. Growth comes from the supply side, inventions, innovation, entrepreneurship. Redneck tinkers and their freaking redneck engineering in their garages. When I say redneck, it's not a term of derision. It's a term of nothing but respect, my friends. Just some freaking Joe Schmo putting together a gasifier, going to take to the market and sell. Look, here's my biggest redneck tinker right here. This guy. Well, we love you. In between 2009 and 2016, without the tremendous tailwinds from the likes of fracking, smartphones, apps, and 3D printing, it is easy to believe that two major tax hikes, increases in regulation and spending, and massive fines on financial institutions would have pushed real GDP growth negative. Government is bigger and tax rates and regulation more burdensome in Europe. That's why it's lagged the U.S. growth for decades. In fact, it's even worse because we've been carrying the day when it comes to military. They haven't had to spend crap on military, relying on good old Uncle Sam. I say, screw that, man. You want to join the group of NATO? Pay your fair share. We need to stop. I'd say pull everybody out of Japan, everybody out of freaking the European Union. Get them out, bring them all back here. Screw these guys, man. If they want to be in Poland, that's fine. If Poland wants us there, that's one thing. But man, because that would stop the communists, the bear that is sitting there waiting to attack again. But for Germany, why we got anyone in Germany? Nah, forget all that. The old ideas have been transfixed investors who cannot think about the economy without coming at it from a government policy point of view. How much new QE will the ECB propose? And what about Trump's tweet that the U.S. should have negative interest rates? This is dangerous for long-term economic growth in both the U.S. and abroad. People will suffer to the extent that these policies are followed. The good news is that in the near term, corporate tax cuts in the U.S. and a continued reduction in regulation are positives for the supply side, more than offsetting the cost of trying to bring China in line with global norms. Thanks to these supply-side policies, the U.S. does not face a recession. New technology is continuing to lower costs, increase profit margins, and boost earnings. None of this positive news is from government spending. In fact, government spending only crowds out the private sector and reduces investment and opportunity. If the U.S. does not change course and follows Europe through its Keynesian looking glass, it will eventually pay a price. Completely agree. A damaging price, but for now it's just words and fear. And profits and growth beat out words and fears every day. Yep, I agree with that 100%. Here's M2 money supply, commercial industrial loans, year over year. That's interesting. I don't know what that means. Retail sales, I mean, I know what M2 is. I just don't know how to, year over year change in commercial and industrial loans is up. So that's got to be good. Money supply year over year, 5.5%. I don't know how that affects inflation, but we shall see. Retail sales increased 0.4% in August. Add today's retail sales report to the litany of other positive news coming out of the U.S. economy over the past few months. A truly data-dependent Fed should not have cut rates in late July. Yeah, forget what Trump's saying, man. He doesn't know. In this case, he's wrong. Which is one of the things about what some of the right-wingers did not want Trump to begin with because they said, he's not a true conservative. I agree with that, but you got to beat the left first. Beat the left first, and then we can talk about true conservatism, and Trump's the only guy who can beat the left. Hell, Mitt Romney couldn't. Mitt Romney's freaking campaigning against Trump now for 2020, even though Trump supported him. Just these guys are just all snakes in the grass. The idea, I had a Romney-Ryan poster outside my front yard in New Jersey, nonetheless. Of course, that got stolen 3 times. And then I put one up for the NRA. I said, I'm a gun owner and I vote, and that got stolen too. Good times. Today's retail sales report shows the consumer is doing very well. Sales increased 0.4% in August, rising for the 6th consecutive month. The details of the report were a little bit more mixed, and the overall headline would suggest that sales rose in only 6 of 13 major categories. But there's no doubt the consumer is doing well. Autos and non-store retailers, think internet and mail order, led the way, rising 1.8 and 1.6% in August, respectively. Non-store sales are up 16% from a year ago. Wow. Sitting at record highs and now make up 13% of overall retail sales. Non-store sales make up 12.8, 13% of overall retail sales. The largest decline in sales in August was for restaurants and bars, which had a 1.2% decline. The largest drop since September of last year. It may have been due to the approach of the Hurricane Dorian, in which case they should rebound in the months ahead. Core sales, which exclude autos, building materials, and gas stations, the most volatile sectors, were unchanged, but are up 4.5% from a year ago. And even with a flat reading in August, core sales are up 9.4% an annual rate since 2019. The fastest 8-month pace of growth we have seen since record keeping began in 1992. Jobs and wages are moving up. Companies and consumers continue to benefit from tax cuts. Consumer balance sheets look healthy, and serious debt delinquencies are down substantially from post-recession highs. For these reasons, expect continued solid gains in retail sales in the year ahead. In other news today, on the inflation front, import prices fell. Import prices fell 0.5%, while export prices declined 0.6%. In the past year, import prices are down 2%, while export prices are down 1.4%. We expect these inflation figures to move higher in the coming months. All right. And there's a CPI. It did rise 0.1% in August. All items right there is the red. And then all items, period, what's that? 82% change, period to period, all items. I don't get the difference between the purple and the red. Percentage period to period. Oh, year to year. Okay. I'm not sure what is period to period, the monthly thing. Tell us again why the Fed should be cutting rates. You see, my man Brian is not big on the Fed cutting rates. Oh, he's sleeping right here on my arm. I just love you, man. You gotta love the puppy. Gotta love the puppy. Gotta love the puppy. Gotta love the puppy. Tell us again why the Fed should be cutting rates, because the data suggests otherwise. Consumer prices rose 0.1% in August, while core prices, a gauge of inflation that strips out the typically volatile food and energy components, rose by 0.3%. Overall, consumer prices are up 1.7% in the last year, but they've been held back by declining costs for energy. Yay! Core prices are up 2.4%, tied for the largest 12-month increase going back to 2008. And given the Fed's 2% inflation target, that should be a signal that everything is looking okay. Not too fast, not too slow, just right, but they certainly shouldn't be cutting rates. But the Fed showed at its last meeting has moved away from a data-dependent stance, so don't expect the pickup inflation paired with yesterday's report on producer prices, which showed core prices above 2% as well, to change the Federal Reserve plan for additional rate cuts. A look at the details of today's report should at least make things interesting when the Fed releases its surveys of economic projections at next week's meeting. While core inflation is up 2.4% in the past year, it's up at faster 3.4% annualized over the past 3 months. That's the largest 3-month gain since 2006. The Fed needs to keep this in mind. All right, so we're just going to, it would better serve realizing that the woes in Europe, Japan, and China are issues with fiscal and regulatory policy, things monetary policy can't fix. We believe these data, as well as strength, trend inflation, which is far more important than single month readings, don't support the case for rate increases. In employment news, this morning, initial jobless claims fell 15,000 to 204, and continuing claims declined 4,000 to 1.6 million. Plugging this data into our models suggests non-farm payroll to continue to grow at a healthy pace in September. And here's our negative interest rates as full goat. I'll leave that for you guys to read. Right now, I got to put Pablo down because, boy, even though he's just a little puppy, a Chiweenie, he is heavy. Pablo says, bye-bye, everybody. Bye-bye. Bye-bye. Oh, there you go. All right, and we'll see you guys next time. Thanks now.